Silicon Valley Bank has collapsed and federal regulators have taken control.
Try and thin any sort of contagion effect.
Impacting tech startups, leaving customers in limbo.
Raising concerns about the broader economy.
If we hadn't been driving our economy with easy money and then trying to really quickly undo that, we wouldn't be having these problems now.
Americans can rest assured that our banking system is safe.
In a special frontline investigation,
we're now facing a world of many potential outcomes.
Money has changed faster than most of us realize.
Every financial function had failed, and we had to restore them.
Do you think it was a radical policy?
I most certainly did think it was a radical policy.
Did the Fed inject money into the economy?
About recent government stimulus program.
It's no longer tied to brick and mortar banks or even physical cards.
It's supposed to be our democratic institutions that do that, not the central bank.
And an uncertain future.
For American families.
It's not just that we're getting more calls, it's that the folks who are calling us are in greater distress.
Today, your phone can hold your entire financial life, from paying friends to investing, borrowing, and even running a business. Digital-first banks, embedded finance, and mobile money are reshaping how people everywhere access and manage money. Whether it's someone sending money across continents in seconds, or a small business getting an instant loan inside an app, the way we think about money is evolving. But how did we get here? And what does it mean for the future of banking, business, and everyday life? The story begins with traditional banks, towering buildings, tellers behind glass, and a lot of waiting. For centuries, if you wanted to save, borrow, or transfer money, you had to go to a branch and fill out forms. Everything started to change in the late 1990s and early 2000s. The internet made online banking possible. Suddenly, people could check balances, transfer money, and pay bills from their computers. No more standing in line, no more trips to the branch. Then came smartphones. Mobile banking apps let people manage money from anywhere, anytime. A bank account was no longer tied to a location, it was tied to a device in your pocket. That shift gave rise to digital-first banks, also called neobanks. Companies like Monzo in the UK, N26 in Europe, Chime in the US, and Revolut worldwide began offering banking entirely through apps. They didn't have branches. They didn't rely on physical infrastructure. Everything was online, designed for speed, simplicity, and convenience. Meanwhile, in parts of the world where traditional banks were rare, mobile money started filling the gap. One of the earliest and most famous examples is M-Pesa in Kenya. Launched in 2007, M-Pesa allowed millions of people to transfer money instantly using just their phones. Families could send funds to one another, small businesses could accept payments, and even microloans became possible, all without a traditional bank account. These early successes laid the foundation for the financial revolution we're seeing today. The combination of digital-first banks and mobile money showed that finance doesn't need buildings, paperwork, or even a traditional bank account to work. It also changed expectations. People wanted faster payments, instant loans, and apps that could do everything a bank branch once did, but on their phone and with no friction. This was the beginning of a world where banking could exist anywhere, integrated into everyday life, ready to evolve into something much bigger. If digital-first banks changed where we bank, embedded finance is changing how we bank. Embedded finance means financial services appear inside apps and platforms that aren't banks. Instead of going to a bank, you can pay, borrow, or invest directly within the tools you already use every day. Take Uber, for example. Drivers don't have to wait for a monthly paycheck. With embedded finance, Uber can pay drivers instantly, tracking earnings in real time. Or look at Shopify. Small businesses selling products online can access loans, manage payments, and even insure their operations directly through the platform. It's convenience like never before. You don't open a separate banking app or visit a branch. The financial service comes to you, seamlessly, embedded into the apps and services you already rely on. This approach benefits businesses too. Companies can attract and retain users by offering payments, lending, or insurance without needing to be a bank themselves. It opens new revenue streams and increases customer loyalty. For consumers, embedded finance makes life easier and faster. Need a loan to buy something online? It can appear right at checkout. Want to invest your earnings from an app? You can do it instantly, without leaving the platform. Embedded finance isn't just a trend, it's reshaping the very structure of the financial system. Traditional banks are starting to notice. Some are partnering with platforms, while others are developing their own embedded solutions to compete. The real promise is accessibility. People and businesses that previously struggled to get banking services can now access them with just a few taps. And for millions of people worldwide, especially in regions where banks are scarce, embedded finance is opening doors that were previously closed. It's a world where financial services meet people where they are, rather than forcing people to go to the bank, and it's only growing. While embedded finance is changing how we access banking, mobile money is transforming who can access it. In many parts of the world, traditional banks are rare or difficult to reach, but mobile phones are everywhere. Mobile money platforms turn a simple phone into a bank account, letting people send, receive, and save money without a physical branch. One of the earliest and most successful examples is M-Pesa in Kenya. Launched in 2007, it allowed millions of people to transfer money instantly using just their phones. Families could send funds to one another, small businesses could accept payments, and even microloans became possible, all without a traditional bank account. Asia has its own success stories. Alipay in China and Paytm in India have turned mobile payments into everyday habits. People can pay for groceries, ride-sharing, bills, and even invest directly from their phones. In the Philippines, GCash lets users pay bills, send money, and access loans, all with a simple app. The impact goes beyond convenience. Mobile money gives financial access to people who were previously excluded. It allows entrepreneurs to start businesses, families to manage household finances more efficiently, and communities to participate in the broader economy. Trust is crucial. These platforms often rely on mobile carriers, government regulation, and secure technology to ensure money is safe. As adoption grows, millions of people are becoming comfortable with digital finance, sometimes even more than traditional banking. Mobile money is also reshaping remittances. People working abroad can send money home instantly, at lower cost than banks. This has a real economic impact, improving livelihoods and creating opportunities that were previously impossible. In short, mobile money is not just a financial tool, it's a global movement. It shows that banking doesn't have to be tied to a branch or a card. It can exist wherever people have a phone and a connection. As powerful as digital-first banks, embedded finance, and mobile money are, they also come with challenges. Governments and regulators are still catching up. Financial rules that were built for traditional banks don't always fit these new systems. Companies need to balance innovation with safety, ensuring they protect users while staying compliant. Digital money is vulnerable to hackers, scams, and fraud. As financial services move online, platforms must constantly invest in security, encryption, and monitoring. A single breach can shake trust, and trust is everything in finance. Not everyone has a smartphone or reliable internet. Rural populations, older generations, and low-income communities can be left behind. For digital finance to reach its full potential, access needs to be equitable. Despite these challenges, the future is full of promise. Payments, loans, and savings can be integrated into everyday apps, making financial services faster and more convenient. Entrepreneurs can access instant loans and digital tools to grow businesses. People who were previously unbanked can now participate in the global economy. Some predict a world where finance is invisible, embedded in the apps we use daily, running quietly in the background, and accessible to anyone, anywhere. Traditional banks may adapt, but the direction is clear. Money is becoming digital first, mobile, and everywhere. The question isn't whether this future will arrive, it already is. The real question is how we use it responsibly, securely, and inclusively. The way we access, send, and manage money has changed forever. From branches to apps, from cash to mobile wallets, digital-first banks, embedded finance, and mobile money are reshaping the world. Finance is no longer just about banks, it's about technology, access, and convenience. And it's about people, giving more people the ability to control their money, participate in the economy, and improve their lives. The next time you make a payment or receive money on your phone, remember, this is not just a transaction, it's part of a global shift, a revolution in how money moves and who it's moving for. Stay curious, stay informed, because the future of finance is already in your pocket.